On the charts lay many hidden secrets, many dig but few find the precious gems. So far in Bitcoin we've dug them out one by one, yet sometimes the rarest ones are not to be found on the Bitcoin charts themselves, but rather elsewhere. In the previous episode, we discussed how this zone right here at $41,000 to $42,700 is absolutely critical for Bitcoin. It's the very gatekeeper between the bulls and the bears, and if the price reverses here, then our entire zigzag shall be disqualified for a second wave bottom, preceding a sharp bullish third wave. If on the other hand Bitcoin were to break below it, then leave your short-term bullish hope at the door, for it'll do you no good in the bearish house of terror. In this episode, we'll go deep on another very important technical gatekeeper, namely a well-hidden yet immensely important technical gem that confirms if or when Bitcoin is ready for new all-time highs. And equally so, the very reversal point at which Bitcoin has completed its zigzag. And these two clues alone are worth their weight in diamonds. Allow me to take a moment to make myself perfectly clear. This is what we do on this channel. On long live trading, no storm is strong enough to rock our analysis. And once we've gone deep enough to establish a proper case, we don't just change it. We add onto it, layer by layer, stone by stone. And that is exactly why we managed to sell here and here, why we anticipated a B wave before it had even initiated and hence bought here, and then sold it all again here, and all in anticipation of a C wave to follow. And ladies and gentlemen, here we are. And this is why we only manage one episode a week. For as much as it may be a mystery killer, you couldn't begin to fathom how much time and brain power that goes into each thesis and analysis. Quality takes time, it must take time, and that's why we find the rare gems and get things right. And to those of you who want to get right inside my brain and enjoy my continuous in-depth thought process on Bitcoin and stocks and how I reach the conclusions I do, I strongly recommend you once again to join Augere. We are the platform that will be around when everyone else has gone broke. For once the market topples over, there will be bankruptcies en masse and gnashing of teeth. And this is why over the last couple of weeks our main trades on Augere have all been short positions. With that said, my main focus, what's closest to my market heart, is and remains Bitcoin. This is what I know best, and my track record thus far speaks volumes on its own. And mind you, this is not a Netflix subscription. This is a professional platform at which we do the work for you at finding and producing ready-to-consume trades. 6 professional traders with different styles, areas of focus and expertise under one single roof. And all this for a coffee a day. Before getting into the meat and flesh of this episode, I'd further like to recommend any Swedish-speaking viewers out there to check out Hasses Analyser on Twitter and Instagram. This guy is a solid analyst, one of the few that I in fact follow myself, and the main analyst of an 80,000 member strong stocks group on Facebook. Hasse mainly focuses on Swedish stocks and cryptos and continuously produces educational pieces for anyone who wants to improve on their TA. So do check him out, you'll find the links in the description below. Let's now move on to the main event, the hidden technical gems that tell us exactly when Bitcoin is ready for new all-time highs. If you haven't watched the previous Bitcoin episode, I strongly propose you to do so. It's one of the 3 most important episodes produced thus far, possibly on the entire YouTube. And as we don't look at basic level stuff here, but rather go deep, this episode is rather vital for you to obtain a thorough holistic understanding of what's really going on. Now, until proven otherwise, our zigzag theory is fully in play. This here may very well be the third wave of the first wave of the C wave. Don't worry, it's not as complicated as it may sound. Take a good look at these visuals, they should make it perfectly clear. As discussed in the previous episode, this critical support zone tells it all. It literally contains everything we need to know whether Bitcoin's bullish or bearish. But if this key zone were to hold up, how and when will we know for sure that new all-time highs are next up? How do we know that Bitcoin won't get rejected, bounce down and continue correcting or moving sideways upon any of the above resistance zones? There's a world out there full of fluff and time-wasting so-called analysis. And that's why I'm here to provide you with real answers. So if you appreciate this episode and what I'm about to tell you, then please return the favor by hitting the like and subscribe buttons. And more importantly, share this episode with others who may benefit from hearing this too. For this stuff you're about to watch is exclusive. You won't find it anywhere else but here. And yeah, not financial advice. Now, recently on Twitter, I announced that I'd be focusing on comparing the internal technical strength between Marathon, Riot, and the alike. And so I did, but then it dawned on me. Why do I bother comparing Marathon to Riot when I in fact should be comparing Marathon to Bitcoin? For that's where the real clues are to be found. The internal strength relations between Marathon versus Riot or Hut 8, another Bitcoin mining company, are only relevant when it comes to scaling in again. What we first need to identify is when and why we'd be looking to go long, and first then we will settle on the strongest internal runner. In this episode, we'll look at Marathon versus Bitcoin only, and this restriction is due to time limitations as I otherwise wouldn't be able to finish this episode on time. Riot and Hut 8 and their internal strength to that of Bitcoin do look overall similar to that of Marathon. Yet to anyone who wants the full report of all three, a very interesting and revealing one I can assure you, I propose you read them on Augere, where they're stored in bits and bytes for eternity to follow. With that said, please enjoy some clarity and answers to everything you need to know. It's all on the house, stuff you'll find nowhere else but on long life trading. Starting on the monthly chart, when we compare Marathon's strength in direct relation to that of Bitcoin, we can clearly see that holding Marathon over time makes you poor, whereas holding Bitcoin makes you rich, literally. But what we're really looking for are times when Marathon trends. Now, Marathon's movements compared to those of Bitcoin are certainly irrational at times. As a simple example, Marathon did not at all keep up with Bitcoin's bullish pace throughout 2016 and 2017, whereas it from November 2013 until January 2015 outperformed Bitcoin by 1,650%, or 17.5x. Since the April bottom last year, however, Marathon has outperformed that of Bitcoin by more than 14 times. Meaning if you were to have invested in Marathon instead of Bitcoin at the time, you would have 14 times as much profits. Or put into plain numbers, if you'd invested in Marathon by April 1st last year, you'd be no April Fools, as it would have gone up by a staggering 8,600%. Whereas Bitcoin during the same period would have returned a profit of 600%. Our purpose now is to identify when it's safe to lay our bets on the rabbit rather than the turtle. And this answer we'll find by comparing Marathon's technical strength versus that of Bitcoin's spot price. So let's see then what we can make of it, and we'll do so by zooming into the weekly chart. Now, first and foremost, we can distinguish how Marathon versus Bitcoin is not only bound in a sideways range, it has also formed a big reversed head and shoulders pattern, complete with fully matured shoulders and a head. The neckline of this head and shoulders is the very same as the resistance line of the sideways range. This line has acted as both support and resistance in the past, hence given a rather frequent reversal action upon this, a break above it, and one that doesn't turn into a fake out, should move aggressively from a statistical and technical point of view. Very aggressively.
And as soon as they saw me, they came bounding over.
The technical target itself were for Marathon to outperform Bitcoin by 1800%, We get this target by measuring the bottom of the head to the very neckline. Practically speaking, this would mean that if Bitcoin were to reach $170,000 or 4x from its current levels, then Marathon would do more than 70x from its current price. Naturally though, this is both unrealistic and delusional to expect, as it'll leave us with a single Marathon stock at around $2,300, or 6,500 times your investment from its last year all-time low of 35 cents. Just forget it, that's not gonna happen. What many analysts get all wrong is that they assume every technical formation to reach their default targets. According to Thomas Bolkowski, however, is rather a standard for most formations not to reach their ultimate targets, and Head and Shoulders in particular. In this case, if we take another look at the Marathon versus Bitcoin chart, the next significant area of resistance is around the previous pivot tops for a price outperformance of 280 to 350%. Now that is more in line with real-time expectations and still good enough for us to hop on board with a heavy long position. Assuming a Bitcoin cycle peak of $170,000, this would amount to Marathon reaching a high of around $500 to $600 at most, which is still in the far upper range of what we could realistically bargain for. But as close as we may seem to be to a reversed Head and Shoulders breakout, don't be deceived, for there's a lot of heavy and nasty technical resistance above before a juicy outbreak is in play. Firstly, we have a 1-year-long RSI divergence, which finishes off by closing on the prospect upper bearish blue from below. And as most of you know by now, that is horrible news to any bulls. The last time this happened, Bitcoin went down in 3 stages, in which it lost -33% over the first 6 weeks, -90% over 11 months, and lo and behold, -99.99% over the course of 5 years. And that's not a trap you want to set foot in, for not only will it chop off your foot, it will drag your poor trading account straight to hell, and from what I've heard, that's not a pleasant place to be.
Oh God, it's all real! Oh, it hurts! Oh, I shouldn't have doubted it! I shouldn't have let you make me doubt it! Oh, I blame you! I blame you!
In this sense, as Bitcoin's zigzag theory still stands, this likely means that Marathon is about to suffer further in comparison to that of Bitcoin. Here's why, and here's what I think would be the ideal bullish scenario. As disclosed, we'll naturally ladder in everything we can upon a breakout from this neckline. Such breakout would equally amount to the RSI divergence being broken, which on its own will supply us with extra force. And to anyone who may remember, this is exactly how and why we went back all in at $32,000 back in the summer. It was all based on Bitcoin breaking its 8-point RSI divergence on the daily, and we all know how that went. Now, one separate thing that in fact does speak in favor of a breakout is the EMA ribbons, which have now swapped from being incredibly bearish and reliably so to instead being bullish. But here's the thing, if Bitcoin is still in the midst of completing its zigzag, it means it's in a consolidation. And what have we continuously concluded about corrections and EMA ribbons, or any other overlays too for that matter? We keep obsessing about how any underlying that is in a correction or formation creation flings back and forth between those ribbons. Hence, a break below these ribbons would further confirm that Bitcoin is in its well-renowned zigzag, and that we shouldn't expect it to stop plunging until it's completed its course of action. But, and here's where things get truly beautiful, as long as Bitcoin stays bullish from its primary and secular point of view, as in above roughly $22,000, and for more on this very important overview, please watch this episode, a mandatory watch by now, Bitcoin still expected to make some dire moves to the upside to complete its cycle. And that's where this diagonal line becomes of prime interest to us. So far, this line is not technically confirmed as support as it's only got 2 touches. But if Bitcoin were to plunge down and complete its seaway, we can confidently assume that Marathon will suffer even more. If Bitcoin were to go as low as $22,000, then based on the extra distance of a 40% underperformance, we can expect Marathon to reach as low as $10 to $14 depending on when it were to happen, in addition to giving some wriggle room to this diagonal line. So what then can we conclude from all of this? To make perfect sense of it all, let's lay the technical pieces into a fully coherent picture, for once you are far away enough to see it all, it's rather a masterpiece. If Marathon versus Bitcoin manages to break out of its reversed head and shoulders, I expect it to vastly outperform that of Bitcoin's spot price. What this tells us is that Bitcoin then will trend in a bullish way, as we cannot logically expect Marathon to rally whilst Bitcoin is in decline. And the reason for this is because Marathon is reactive to that of Bitcoin's spot price, just like a dog wags its tail and not the other way around. Moreover, given the pent-up pressure that lurks behind the surface of this horizontal resistance line, and even more so the neckline of this reversed head and shoulders pattern, we shall expect a pumpy move which could not be achieved if Bitcoin were to continue its indecisive correction. Whether that correction materializes as a price decline or a grow our gray hairs type of time-based correction. This naturally concludes that any technical outbreak from this formation, which does not result in a fake out, will pave the way for new all-time highs. Hence, this would be the ultimate confirmation that Bitcoin won't get rejected and plunge down again once it reaches its overhead resistances and previous all-time high. Equally so, any retest of this diagonal line, with generous margins of course, as it's a diagonal line and therefore automatically unreliable, I fucking hate them, should be expected to occur at the very bottom of Bitcoin's zigzag correction. It would hence be a sign of reversal and therefore an ideal risk to reward spot to go long. If on the other hand this diagonal zone were to not hold up, and if Bitcoin were to break below its estimated $22,000 primary and secular bottom, then we have a massive bear market on our hands, one which in turn would be a likely indication that the world markets have topped out and toppled over for many years to follow. That was all for now, thank you and goodbye.